Hey guys, welcome back to another video. In this video, I'm going to be talking about Meta platforms. This stock is up 157% this year, and it's up 20% just today. It spiked a lot, jumping from about $390 per share to over $470 per share. We can see compared to the rest of the market, which is up about 18%, Meta is completely outperforming the market over the 1-year chart. So in this video, I'm going to look into their recent earnings results. I'm also going to look into their business model, their financial statements, and then also use a DCF model to value their company. But before I get into that, let's talk about how Meta actually makes money and their business model. So Meta makes money primarily by selling advertising space on its various social media platforms, Facebook, Instagram, Messenger, and WhatsApp. In 2022, Meta's revenue was $116 billion, which when converted to daily revenue amounts, basically means they made about $320 million per day in 2022. More recently, the company has been investing in virtual reality products as part of its plan to build out the metaverse. However, this segment of Meta's business is not a primary source of revenue for their company. Meta competes with other companies to sell advertising space to marketers, including X, formerly known as Twitter, Google and YouTube, Apple, and Amazon. Facebook and Instagram are free to users, and they have billions of daily active users. By building this massive user base, Facebook and Instagram have become assets that are attractive to marketers who want their products to be seen by all of the people who use Facebook and Instagram. In 2022, Meta's revenue per user was about $40 per user. Meta offers targeted ads for advertisers to purchase that show their ads to people based on age, gender, location, interests, and behaviors. Ad prices are determined based on an auction system where marketers bid against one another to get their ads shown on these social media platforms. Whenever a user interacts with the ad, either just by seeing it or by clicking on it, the marketer is charged for that interaction. If a business wants to run an advertisement with Meta, they set a maximum budget and they are charged a monthly bill based on the performance of the ad. At the moment, Facebook is Meta's primary source of revenue. However, that being said, it is not their primary focus. They're currently investing in building their virtual reality products to be their new primary source of income. So that's their main focus, which is highlighted by the fact that they changed their name from Facebook to Meta. Lastly, some really important information. Meta announced their first cash dividend of 50 cents per share, payable to shareholders on record on February 22nd, 2024, and the dividend will be paid on March 26th, 2024. So now that we've covered their business model, let's get into some of the financial results for Meta. So as we can see right here, this is a set of their financial statements for their third quarter. We can see right here, total assets were $216 billion, $73 billion in liabilities, and then $142 billion in stockholders' equity with $75 billion in retained earnings. When we look at their income statement, we can see these are the results for the third quarter. And then right here, these are the results for the fourth quarter and then also for the full year. For the third quarter, we can see they had revenue of about $34 billion, up 23% year over year from $27 billion. And then for net income, they had $11.5 billion, as we can see right here, which is up 164% year over year from $4.4 billion in the prior third quarter. So obviously massive increase in earnings for Meta, but as we can see right here from their fourth quarter, it actually got even better in the fourth quarter than in the third quarter. In the fourth quarter, their revenue increased more, up 25% from $32 billion to $40 billion, and we can see net income increased more by about 201% from $4.6 billion to $14 billion. So it basically more than quadrupled, which is unbelievable, to be honest, that only about 1 or 2 years ago, Meta was plummeting. Their stock price dropped 90%. Their earnings dropped 90%. Mark Zuckerberg posted that weird selfie of him in the metaverse with his little virtual avatar, and the news was so bad that their stock just plummeted after that and erased almost all of its market capitalization. People were posting bad articles about Facebook. And then literally 2 years later, the stock jumped up from $90 all the way back up to all-time highs, what is now almost $500 per share. Also, their financial statements are showing earnings growth in the hundreds, from 164% in the third quarter to 200% in the fourth quarter. And then if you also saw one of Zuckerberg's recent appearances on the Lex Fridman podcast, he touched on some of the advancements that they've made in the metaverse, and they actually look pretty promising. The technology looks really interesting. So it's pretty incredible how fast some of these companies in the stock market can just turn around on a dime just like that. So definitely interested to see where Meta goes from here. Also, as we can see from the right-hand side here, for the full year of 2023, their revenue increased 16% from 116 billion to 134 billion, and their net income increased 69% from 23 billion to 39 billion. In total, for 2023, Meta repurchased about $20 billion of shares, which they used to return value back to shareholders. We can see right here their cash flow statement for the fourth quarter and the full year. Their operating cash flow for the fourth quarter was 19 billion, and for the full year it was 71 billion. And then we can see how much they repurchased in Class A common stock, 20 billion for the full year, and then 6 billion for the fourth quarter. For their third quarter, as we can see right here, if I scroll down to their cash flow statement, we can see they had operating cash flow for the first 9 months of about 51 billion, and then we can see right here they repurchased about 13 billion through the first 9 months of the year. Now I want to get into the valuation model to try to figure out what the intrinsic value of Meta is. I'm using a growth rate of 3.5% because based on the growth rate in their cash flows from 2018 to 2022, it was about 3.5%, from 15 billion in 2018 to 19 billion in 2022. Obviously, this is pretty wildly pessimistic in my opinion, considering the growth that Meta has recently shown, but I'm just going to go off of the historical results from their financial statements. Then also, I'm using a WACC metric of about 8% to calculate the discount rate for the DCF model. I got that using this calculator right here. Basically, I calculated the cost of equity by using the risk-free return, beta, the market return minus the risk-free return, which is 11%. We can see their interest rate on their debt, which was 1%. And then if we multiply that by the equity proportion and debt proportion of their balance sheet, most of which was equity, we get the weighted average cost of capital of about 8%. Based on that, plus the fact that they have $28 billion of cash after subtracting debt and 2 billion shares outstanding, puts their estimated intrinsic value per share at $127 per share, which means that based on that valuation, they would be undervalued. But obviously, as I said, this DCF model is using a lot of assumptions. So if you messed around with the growth rates and were obviously a lot more optimistic than I was in this example, then you could end up producing an intrinsic value metric that was a lot higher than $127 per share. That being said, their stock did jump up $78, almost $80 in one day. So it's going to be kind of difficult to value the company right now based on the current share price. If the share price stays at this level, you could make the argument that they're undervalued and that investors just got really excited with the good news coming out about Meta, their dividend, the progress they've been making in tech. But we'll see if the stock stays at this level or if it sort of recovers back down to a baseline price. Then right here, we can see a competitor analysis comparing Meta to two of their main competitors for ad space, Google and Apple. We can see based on their most recent 2023 metrics that were updated, their profit margins are actually way better than they were now than in 2022. They have a gross profit margin of 80%, net profit margin of almost 30%, return on assets of 18%, return on equity of 28%. They have a very low debt to equity ratio of 0.24. and then a PE ratio of 26. And also, I should probably update this because now the dividend per share is actually 50 cents per share. So based on this, it looks like Meta is definitely in charge on this list. They have the best profit margins out of the three companies. They're also paying a dividend, which I didn't update here. And then also they're trading at a pretty decent PE ratio, right around the same as the other companies. So based on this, you'd probably want to give it to Meta Platforms. Then lastly, I wanted to compare Meta to the other companies we've looked at on this YouTube channel. At the moment, based on that DCF model, Meta was not trading below intrinsic value per share. These are the companies that we've looked at that were trading below intrinsic value per share. Then we can see right here for dividend yield, Meta's dividend yield is pretty low, so they don't make it onto this list. For growth rate, I'm only using a 3% growth rate based on their cash flow growth from 2018 to 2022, so that wasn't good enough to get onto the growth rate table. As we can see, AMD had the highest. We can also see for profitability ratios, Meta is really dominant. They come in second place for gross profit at 80% and fourth place for net profit at 28%. And then for Q3 year over year revenue and earnings growth, Meta is completely in the lead. They have first place for revenue growth at 23% and second place for earnings growth at 164%. I also made a quick fourth quarter table down here. Meta is the only company on that list for now because we haven't really looked at any other companies for the fourth quarter. But as of right now, 25% for revenue growth and 201% for earnings growth for the fourth quarter. It's going to be pretty tough for any of the other companies to beat Meta out of the first place spot. Then lastly, to end off the video, we can see stock performance over the last 5 years. They returned about 223% or 219% over the last 5 years. So that puts them in the 10th place spot on our top 10 list. Tesla had the first place spot at 150%. So let me know in the comment section down below what you guys think of Meta. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.